40 years prior, African Americans were enslaved. And African American literacy rate in one generation, literacy rate amongst the African American community went from less than 5%. A guy like Larry Fink managed that. The mortgage business took a dive. He led the loss of money for people in his firm. Then he was sort of a pariah. As of Q1 2024, which is March 31st, 2024, their balance sheet was $484 billion in assets. Do you think BlackRock owns this much stake in these large multinational companies and they don't have a say or a seat at the table? So when your why becomes more profound than just some arbitrary figure, then it changes the dynamic of how you move. It changes, like you always go back to that why. I'm doing this because of this. Once your why changes, this part becomes easy. And I'll say the strides, so it can happen fast, but once you establish the why and don't tie the why to an arbitrary number. We know J.D. Rockefeller for Standard Oil, but what we don't know is how he's created generational wealth beyond measure through use it as a wealth building tool, like the Rockefeller family did. Hey, it's Obie Chukwuma, Space and Equity. We're all about increasing assets and creating new space. The video you're about to watch is power-packed, talking about group economics. Simply put, group economics is individuals with similar objectives and goals deliberately working together to obtain those objectives and goals. Furthermore, I contend that group economics is engaged all the time, consistently. When you hear things like BRICS, Brazil, Russia, India, China, South Africa, and all the countries that are being added to that, that is a form of group economics. So be very attentive. You can scroll through, skip to the parts that you like. We talk about Black Wall Street and how that was a stellar form or example of group economics, happened at the turn of the 20th century, not even over 50 years removed from the end of slavery in enslavement in the United States. Talk about the big boys like Microsoft, Apple. Just recently, I believe last week, NVIDIA became the highest publicly traded firm in the United States, I think in the world. That's amazing because they're, 20 years old, if that. In fact, all these players, Microsoft, Apple, NVIDIA, Amazon, Meta, 50 years ago didn't even exist. Think about how things shift. We'll talk about the financial cycle that everybody experienced, from the individual to the nation state. We're talking about watching the trends of the shifts, highlight Mark Cuban and him selling the Mavericks to firm out of that's involved in legal gambling, and watching that shift of how the NBA is being financed from television ads to these legal online gambling platforms. And what does that mean for you? What does that mean for the larger economy? Simply put, if you're not involved in a deliberate form of group economics, you are a pawn or somebody being played in that space. We all experience it. All of us are on this shift, if you will. And I'll close with this. These are the things that we're talking about. Enjoy the video, enjoy the education. We talk about group economics, the value in it, the fact that it already takes place. And for African Americans or Black people in the diaspora, we haven't done it consistently, but it has occurred. It has occurred. So we're gonna walk through that concept.
There's 40 million people, Black people in the United States of America, that spend $2.2 trillion every year. Most of it is on luxury goods and not essentials. How come we can't put a couple billion into companies that we all invest in and own? I already do the math. The maths, right? Yeah. You pull out your calculator. I want you to pull out your calculator, right? Okay. Take 28,650.
28,650. Okay.
Times $600.
Times $600. What did we just do?
Hit equal.
I see it, but what do we do for the crowd, for the audience? What is the 26,000 representing?
The people. So 28,650 people to invest $600.
Yes.
That's $17 million.
You're raising the $17 million. I got you. So
it just take, out of 40 million Black people, all we need is 28,650 people to invest $600, not go to the club, not buy Jordans, not buy bottles, not go on vacation, and we've raised $17 million for a tech startup that we own.
What an important conversation we're having.
That is not a terribly significant amount of money. But what it is that it doesn't take that much when a collective group gets together to make impact. 17 million is not that much money, but it can valuable things have been started with less. I believe BlackRock, which we're going to talk about in this setting here, in the very late 80s, early 90s, started with less than $17 million. And it's the largest PE firm, asset under management firm, definitely in the country, probably on the planet, and about $10 billion in assets under management by BlackRock. So we're going to get deeper into that in this deck. All right. So in capitalism, this is just my working definition. I'm not an economist, just a 20-year plus banker. And what I've observed, the trade and industry are controlled privately, regulated or lobbied via the government, and performed by the masses, meaning the workers are us. The workers are the masses. In an ideal scenario, the masses, the workers are sustained, and the private sector entrepreneurs amass wealth, which makes sense because they endured the risk. So you take on the risk, however you go about doing it, you're rewarded for that risk. And if you want it to continue to thrive, the average person has to do well. If the average person doesn't do well, there's compromise to the whole framework of our platform because it doesn't perpetuate as much. There may be some argument that we have already transitioned. We're a capitalist state for sure, but the way we move, the assets that are owned on a digital platform. There's an author that wrote a book called Techno-Feudalism. Techno-Feudalism, and it's Giannis. I don't even know how to pronounce his last name. I'm not going to do that incorrectly, but Fatima will put up the title of the book, the author, Techno-Feudalism. It's a great read. It's a short read saying that technically we've already transitioned from what we understand as capitalism to a techno state. And that could be explained by the companies that are owned or that have the most assets under management. So just a reminder, at Space and Equity, ComeCorrect Consulting, basically financial advising. So 20 years commercial banking experience, you can operate on the consulting side as a fractional CFO to look at the projects that you're working on, whether you are a physician group looking to expand because you want to buy a new surgical facility, you're a corporate entrepreneur, you want to do something on the side that's going to have your money grow, like purchasing a laundromat. These are some items that we consult in that space. Or you're a developer and you want to find the right bank. The great thing about working at the bank is that I learned a lot. One of the things that we've learned is that not every bank fits everybody. But when you develop relationships, hey, if this bank can't do it, I can send you to this bank that can do it. And there's value in providing that consultation. So again, we're going to speak toward that group economics. It has happened before. A lot of us have heard about Black Wall Street. Essentially, this is in Tulsa, Oklahoma, turn of the 20th century, beginning of the 20th century. There was a collective group of Black people that owned 600 different businesses, 21 churches, 21 restaurants, 30 grocery stores, 2 movie theaters, 6 private airplanes in the 20th century. So when this was like a novel idea, they had 6 private airplanes, hospital, bank, post office, schools, libraries, law offices. Now, why was this so effective? Because it was a deliberate act by a group of people to thrive, but also due to segregation, it was kind of easy to do when you couldn't engage in other forms of economic enhancement. We worked together and probably had a greater ecosystem than we have today in 2024. Of course, we know the story. Typically when it's not as if institutions, particularly in the United States, but really throughout the planet, it's not as if there's no desire for Black people to work together. Oftentimes there's opposition. So in this case, say, you had wealth generation that was surpassing most of the counterparts in the white community, and that was a problem. So typically you bring something else and say, hey, okay, this Black guy did something to this white girl, and all of a sudden we have riots, and then Black Wall Street was burnt to ashes, unfortunately. Doesn't change the fact that there's a model and multiple models of us doing it and having success doing it. And a group doesn't have to be cohesive based on the color of the skin, but a group has to be, it's a dynamic of people with same goals in mind, same objectives that they're trying to be achieved, and you can take it so much further when you're working as a team. So it doesn't have to necessarily be. It just so happens that our passion at Space and Equity is to see economic enhancement and freedom amongst folks who traditionally haven't had as much of that, and it happens to be Black people in this area, and so that's why we focus on that. All right, it's more about group economics. So I'm going to use this stat to kind of illustrate a thing, in that if you can see that Indian American, when I say Indian American, I'm referring to individuals historically from Southeast Asia, like the country of India, have the highest uh, e income by ethnicity. And this is not simply because this is not by accident, but rather by design, if you will. And the reason I say that is, yes, there's a significant amount of the population of Indian Americans that are in high wage earning jobs in the tech space, in the engineering space, do very well on the scholastic standpoint in high school level, go to technical schools, go to four-year universities, and this is the result. But I would say that there's a bigger dynamic of this. Is just some anecdotal observation on my end. I've noticed as a banker that there's a critical mass of the hotel space being managed, owned by the Indian American community. That's just one business vertical. But the reason I bring it up is that the manner in which I see a lot of collective work happening is I've seen groups of Indian Americans come to bring money together, both in the United States and in India, for said projects, whether it be in the hotel space, whether it be in the radio space, whether it be in other business verticals like the fast food restaurant space. It's a system. So one individual may come, and that individual has seed money or equity provided by other members in his or her community. Let's say the seed money or equity is placed into a Holiday Inn flag hotel franchise. That individual that got the investors to put the seed money in, his objective is to turn that into a highly profitable, or as profitable as possible, and then expand that. And then once that individual grows to 2, 3, 4, 5 locations, now that individual puts seed money into the next individual to grow. And then you also have money's clubbed, almost like a family office type scenario, where people are putting their money together for all sorts of projects and might be managed by one or two folks that have background in banking, background in finance. That's happening here in the United States, but also at times when funds is tight, that individual may go back to India, raise capital there, and come back here to keep it collective. And at least so for instance, I'm in the DFW area. There's pockets or communities that are, I would say, ran economically by the Indian community. There's a huge Indian American community in like Carrollton, in Southlake, right outside in Irving, right outside the airport. And you can see the business ownerships that are owned by Indian Americans, and that is a collective effort. There's an agenda. So when you see that, it's easy. Oftentimes we'll look at salaries, we'll look at income, and we just think about income in the corporate space, high paying jobs, 6-figure jobs, and just cut it off there. And that's typically just the icing on the cake. I would say this figure is as high as it is, more as a function of entrepreneurial efforts versus corporate America efforts. And then you see African Americans down at the bottom of this medium income consideration at 51,374. It's a combination of we have a good thing and it gets destroyed. Combination of historical drama from enslavement over the past, over a 400-year period in this space, and all the ramifications that come from that. This same group of people, look, this is early, I said 20th century, turn of the 20th century. So less than 40 years prior, African Americans were enslaved. And African American literacy rate, and I didn't pull this out of my hat, but out of certain readings, including Dr. Claude Anderson, has spoken to this. In one generation, literacy rate amongst the African American community went from less than 5% to over 50% in one generation, or in a 25-year span. Less than 5% to 50%. That is the biggest transformation of, I wouldn't call it intellectual path, because your intellect has nothing to do with your education, but going from undereducated or uneducated to, because of law, it was illegal for African Americans to read during slavery. In one generation, less than 5% to above 50%. There was a fire, a fervor to enhance one's faith. And that fervor didn't just fizzle out based on people's behaviors, that fizzled out based on attacks. But we know that to be the case. So there's a propensity, there's a desire, there's a consideration to counteract those attacks. So be deliberate in counteracting those attacks when you know what's coming, if you will. All right, so we're talking about this is deliberate. This is not just through corporate space employment. This is through a collective desire to own one space, entrepreneurial endeavors. Us being at the bottom is also deliberate, but in that deliberate efforts, we are allowed to counteract and control our own fates. All right, why am I talking about what does BlackRock own? Because the argument is that group economics happens in a lot of spaces, and it's not necessarily just tied to one's race. It can be tied to power. So the reason Microsoft, Apple, NVIDIA, Amazon, and Meta are here is that if you take the S&P 500, if you take the Dow Jones Industrial Average, you take just global markets in general, these are some of the largest players. And I mentioned BlackRock earlier. So BlackRock, if you're not familiar, is a private equity asset management firm. They have $10 trillion of assets under management. And how did these type of firms evolve or were created? So during the 80s, in the late 80s, and specifically in 1987, there was a huge banking or savings and loan crash. A gentleman named Larry Fink was a up and coming, highly talented, performing bond trader. And he had a lot of success early in his career. When I say early in his career, like I'm talking early 30s, late 20s, early 30s. He was a rock star. However, during the savings and loan or the onset of the savings and loan crash, his investment strategies lost millions of dollars for his clients. And if you're not familiar with a bond is an IOU. Generally, an IOU from a government entity saying, all right, we need these roads built in, let's call Springfield, Ohio. We need these roads built. And we're going to give a bond offering, meaning that you invest in the city, we're going to pay you a return of like 4 or 5% over 10, 15 years, 10, 15 years, right? And you can really bank on this because the city's paying you back through taxpayer monies. It's a bond, and somebody has to manage it. So a guy like Larry Fink managed that. The mortgage business took a dive in that space. There was a lot of changeover in banks during that time period. And as a result, Larry was, I don't want to say Larry was a fall guy, just like things happen. It didn't go well. He was a rock star. And then since he led the loss of money for people in his firm, then he was sort of a pariah. But there were people who believed in him, saw his talents in spite of this challenge, and those people helped start BlackRock. Why does BlackRock exist? All right, the ultra wealthy, they can't invest the same way us regular folks invest with money, meaning they have so much money that they want to make sure that they're utilizing technology, analytics to maximize a return on their money. And what was found was it would be easier for somebody who had macro analysis information to provide that asset management versus going to like Charles Schwab, Edward Jones. Those guys had too much money. They may have more assets than the firm trying to manage their money. And so you go to Edward Jones, and that franchise Edward Jones may have like $3 billion of assets under management. Well, if the Perot family or I'm in Dallas, so you see why I'm saying these names, or the Hunt family that owns the Chiefs, they may have more money than the whole Edward Jones office. So you create something like BlackRock. And what a guy like Larry Fink learned is that he was always going to use the highest rated analytics to make decisions, to make relatively conservative decisions, and understood that over the long haul, you never necessarily beat the market. You play the market. So this is BlackRock playing the market. BlackRock has 10 trillion assets. Microsoft, as of Q1 2024, which is March 31st, 2024, their balance sheet was $484 billion in assets. There's a reason why I'm not talking revenue, I'm talking balance sheet. You can have revenue and not have any money in your pocket. You can make a lot of money. Our store that we had to shut down, it could be considered 400,000, maybe a lot of money, but we spent 700,000, so our balance sheet looked ugly. So Microsoft owns $484 billion in assets.
BlackRock owns 7.3% of Microsoft. That means of that $484 billion on the balance sheet, 35 billion is BlackRock's. So the people who invest in BlackRock own 7% of Microsoft. Those ultra wealthy people I was talking about, or those institutions that ultra wealthy people run, they own 7% of Microsoft, one of the largest companies in the world. Let's go to Apple. We know what Apple does. We got iPhones. I'm looking at my iPhone right now. We're supposed to have a Uber Eats come in. All right. Apple, as of Q4 2023, 12/31/2023. It's ideal when you're doing these things, guys. It's ideal to use the same date, but oftentimes it depends on when people report. So I got as close as possible with Apple. At December 31st, 2023, they had $353.5 billion in assets. That's what they own. That's on their balance sheet. That's in their, I don't want to say assets is not just cash, but if you think about cash to hard assets, they have $353 billion worth as of December 31st. BlackRock has a stake of nearly 7%, 6.7% of that, or $23.7 billion. Let's go to, we know Microsoft, like Microsoft Windows, you use Microsoft products every day, most likely. Unless you have an Android, you use Apple products every day. There's 1 billion plus people on the planet that have Apple products. NVIDIA, that's where the AI stuff. 65, this is as of January 31st, 2024, 7%, or $65 billion in assets, almost $66 billion in assets by NVIDIA. Notice how they're one of the highest traded firms in the world, but their assets are way lower than their peers because they're relatively new. So they only have that's the revenue thing we were talking about. They may be pumping out a lot of money, but they don't own as much yet because 65 versus 484 versus 353 is a lot lower on the asset side of things. But BlackRock owns 7% of that, or almost $5 billion worth of NVIDIA assets. Amazon, this is the online warehouse that we all use. Probably got some Amazon stuff coming today at the house. Amazon is $527.9 billion in assets as of December 31st, 2023. NVIDIA, or I apologize, BlackRock owns 32 billion of those 528 billion dollars in assets. Then finally, Meta, Facebook, Instagram that I showed you earlier. All these platforms, you guys, we touch. The only thing we haven't talked about, a lot of people touch, is the pharmaceutical industry. But anyways, so Meta, 222.8, nearly 223 billion in assets as of March 31st, 2024. 16 of that $1 billion is owned by BlackRock. Why do I say this? Do you think BlackRock owns this much stake in these large multinational companies and they don't have a say or a seat at the table? I say no. It is very likely. I haven't looked at the boards of Microsoft, Apple, NVIDIA, Amazon, and Meta, but trust me, the founder of BlackRock, Larry Fink, or his senior management have board seats at all of these institutions. That is group economics. They are making so a small group of people, the leaders of BlackRock, and specifically Larry Fink, have a say in what goes on at Microsoft, what goes on at Apple, what goes on at NVIDIA, what goes on at Amazon, goes on at Meta. I'm not saying this is a bad thing. I'm just saying the reality of you not participating in some form of group economics, a deliberate consideration of what you want to see happen for generations to come, people that you're connected to, you might not be doing it right. And we saw in the Isaac Hayes III's video in the beginning of this clip that it doesn't take that much to make movement. I mean, BlackRock was smaller than that. That $600 that 28,650 people need to put together to create $17 million to go towards whatever project that they believe in is more than the funds taken to start. And even if it's not more, I don't believe that in 1989, 1988, when BlackRock began, I know it was less than $50 million of assets under management that they started with. And now they're a $10 trillion company, and they've created a lot of competitors in that space. What private equity does to the economy, I don't always think is a good thing. But the reality is they're a player in the economy. They're engaged in group economics. Why shouldn't you? All right. So with that, at the end of the day, whether it's BlackRock, whether it's you as an individual, whether it's a nation state like Spain, kind of have all these considerations. There's debt management. If you're a country and you've got these bonds, those are debts that you have to repay. So it's how do I strategically borrow and leverage to make sure that I want the the nation, the city to look the way I want it to look, to move the way I want it to look, to defend itself the way I think it needs to defend itself. Step management, structuring tools. Um, if you savings principles. So when you generate revenue, what am I going to do with that revenue that I generate? I don't want to just sit it. Like, first off, after I've established my budget, functionally been disciplined to manage the budget, what's the yield or the dividends? If the budget says that I got to pay myself 6% every time I get paid, am I consistently doing that? And once I do that, is there margin to do more? Now, because once I've established it, give you a good example. We had the correct nest egg for our household before the coffee shops. For us, we had about 9 months worth of emergency cash that we dipped into, unfortunately, and we had other investment vehicles. But now that we're kind of doing a restart, it doesn't matter. We have our home, we have our 401ks. Until we get personally in our household, what makes sense for our comfort for us is to get to $100,000 in free cash. Till we get to 100,000 in free cash, we're probably not going to make any, we're definitely not going to make any big investments. We may make smaller investments, but getting to $100,000 in free cash in our household is important. So until we get there, we're not, as in the Monopoly analogy, we're not passing go and collecting $200 until we get to the 100,000. And it's for us getting to $100,000 in savings and being deliberate about it doesn't take that long. That would take us, if for example, that would take us about a year and a half of being disciplined to do. So the notion is being disciplined without really anything going. But then if meaning if I grind, because my wife makes a great salary, but it kind of is what it is. It's always kind of be in this space. I make an excellent salary as well, but I have the ability, the flexibility to grind and make that kind of reserve. And we're probably about a third away into that after everything that went down with the coffee shop and the bankruptcy. We're about a third away of that free emergency cash. But for us, and once we get to 100, I might honestly be a little bit more conservative and say, hey, let's make that 200 based on, I know that the dreams that we have, they're big enough where this time you got to protect it right. So once we get to that milestone, we'll probably go to another milestone before we really say, okay, we can take a bigger, quote unquote, risk. And even then, my wife might be like, based on the last time. But I say that to say savings principles, it's more about the desired end versus the dollar amount. The dollar amount is, I don't want to say it's insignificant because it matters. But if you just focus on, I want to save $5,000 instead of why I want to save $5,000, that changes that dynamics. So when your why becomes more profound than just some arbitrary figure, then it changes the dynamic of how you move. It changes, like you always go back to that why. I'm doing this because of this. Once your why changes, this part becomes easy. And I'll say the strides, so it can happen fast, but once you establish the why and don't tie the why to an arbitrary number, for 100,000 is an arbitrary number, but the why is I want to recover from what happened, but the mission hasn't changed. The why is we want to make sure more Black people are economically independent. I have another goal of helping establish 100 millionaires in the Black community. And that's my why. That I can't be quiet about it when that's my why. When I get frustrated and disheartened, so you got a setback, that $100,000 ain't gonna do nothing for my why. But that financial independence amongst people that look like me, empowering people, encouraging and building confidence in places where people didn't have confidence before, that supersedes like a failed coffee shop. It's just us. It doesn't. So that why is way bigger than because if once I get to 100,000, which we'll get there with just kind of waking up and doing what we're supposed to do, and based on the blessings that we've had, that's not it. The why is the overall mission. I also want to be able to live freely bi-coastal. Like I want to spend more time in Nigeria and other places in Africa than I've historically spent. Well, I need to be financially independent to do that. So the why is bigger. And when the why is bigger, and money becomes, we're not chasing money, creating money. In that creation of money, you can be conservative, but you could be like, okay, now the money has to build. How do I understand and leverage the market? How do I understand and leverage insurance tools to raise money? How do I understand and leverage private enterprise, business opportunities with my money? There's risk there, but nothing ventured, nothing gained. Nothing ventured, nothing gained. We ventured and we lost big, but we still know that the opportunity is in taking those properly calculated risks. And then I got to protect my assets. Oftentimes we don't like insurance till we need it. You have to insure your car, but then if you have the unfortunate situation of having an accident, then you're grateful that you have insurance. If you have a bad storm and your roof is damaged, you're grateful that you have insurance. But instead of insurance just being for the catastrophic events, use it as a wealth building tool, like the Rockefeller family did. Well, we know J.D. Rockefeller for Standard Oil, but what we don't know is how he's created generational wealth beyond measure through insurance products. So again, we talk about that. We have the capacity. We're licensed. We have 20 years of experience in financial services to help in that space. Use the tools available. And then taxes becomes a different thing for you once you've generated wealth to that. You can leverage taxes to put your money towards things that you believe in they're still beneficial to society and not necessarily just having 35% of your check just taken and gone. We at times talk to professional athletes who come into money relatively quickly as a result of the hard work they put in their physical skills and our desire to watch those feats on the field or on the court. But what we don't understand is that, man, the tax burden is a real thing that by yourself can be daunting. So then you get involved with people that have expertise in the space, but see you as a mark, as an opportunity to take advantage of. Wouldn't it be great to work with somebody who you have some sort of kindred spirit, can trust, and say, this is how you navigate it? Now, oftentimes, people close to you can also be those vultures. But what we believe in is, hey, providing the expert information that we've received over the years to really help people navigate their generational wealth that they're creating and manage it in a proper way. I'll tell you this anecdotal story that just stuck with me. So I'm at the second bank that I worked at. It so happened that one of the bank's major clients, was a gentleman that had a lot of business ventures. One of the business ventures was investing in athletes, meaning like when an athlete has an agent, there's more than just the agent around. Usually you kind of do a 360. So athlete gets the professional agent that helps negotiate their contract. But then that agent has capital investors, all right, you need somebody in the wealth management space, got a person for you, and you need somebody in the marketing space. They want to make sure that they kind of control everything about that athlete's image and likeness so they can maximize the money. So in this particular case, this client that had other business ventures, he had several athletes that you would know. And I remember there was a conversation about a athlete that came from Clemson a few years back. This would be like in the early 2020. And before signing the contract, we were going to buy a Rolls Royce. And so that the gentleman that was managing the agency for these athletes essentially was on the hook, was basically like he had a loan to help buy these type of assets and they would charge sometimes directly to the athlete rates that are way outside of market. Why? Because this is essentially a kid that has no money, that's about to come into a lot of money. People around him are already taking advantage and putting them in tools that aren't the best tools. So wouldn't it be nice to have somebody say like, I know that you're about to hit it big. I know that you want to have this McLaren, but do you need this McLaren right now? Do you know that you're being charged double the market rate for this? I know, and the argument is that you don't have any credit right now, so you're an enhanced risk. You haven't signed your contract right now, so you're an enhanced risk. But you got all these people already taking advantage of this athlete. So it would be nice to have somebody say, do you want to buy the McLaren right now, or do you want to wait, put your first check into a vehicle that will set you for life and then live off of this? And then you can, maybe in year 2, you buy the McLaren. Maybe even year 1, but after you get the money instead of borrowing from your agent and now being beholden to them at a greater level. That's kind of stuff that we have passion about and talk about and partner with other people that have passion to talk about these things. Mark Cuban. All right. So part of, yes, group economics is valuable, but I also understand that what's going on in the market is valuable. Historically, professional associations like the NBA have relied heavily on television contracts to generate their revenue. Like after Larry Bird and Magic Johnson, the TV contracts got enormous. NBC spent a lot of money and still spends a lot of money with the NBA, with the NFL. I don't know as much. Major League Baseball is a lot more regional than those other two that I just described. Nonetheless, this is shifting because young people, you guys don't watch TV. You watch stuff on your phone. You stream. So how the NBA, the marketing dollars that they use to expand their enterprise or what people are willing to pay for is shifting. It's going to legalized gambling. It's going to streaming sources. And so Mark Cuban kind of saw the writing on the wall and still has controlling interest in the Mavericks, but sold to a firm that already understands because they're already in the legal gambling business. And it's like, hey, if this is where it's shifting, I need to jump out ahead of the shift. So part of what we try to do is like, okay, this is the trend in the market. When I talked earlier about Microsoft, Apple, Nvidia, Amazon, and Meta, the connecting through lines for those organizations, they're digital tools for the most part. Yes, you have an Apple phone, but it's the Apple Store, the platform. There's what we call digital real estate is what is being leveraged. And that digital real estate has already been divvied out from an ownership standpoint to the few in that group economic setting. And now we freely lease out space on those platforms. What I mean by we freely lease out space, well, you know, how long do you go without having your phone in hand? And when you buy stuff, we got Uber Eats coming. I'll use the digital space to do that. Well, the analytics that exist to profile me and then sell to me, I'm freely giving up because I want ease of access. Like I can't, it's really hard to navigate without being on the internet, without being on these digital platforms. You know how much information Amazon has on the things that I like, the things that I do, that they sell to me that way. Well, that's the argument, and take it back to the techno feudalism that we're going to have put on the screen for you with the author, Giannis. I cannot, even if I could remember his last name, I wouldn't pronounce it correctly. But anyhow, Fatima is going to put that on the screen for you. Cuban is recognizing that we have already shifted probably to a techno-feudalist state. We TV money is gone. It's legalized gambling that happens through your phone. Doesn't have You don't have to go to Vegas. You don't have to go to Oklahoma and all these casino sites. People still do for enjoyment, but you can do a lot of that stuff on this digital device. And so he says, hey, I know I bought this thing for 280 million in 2000. I can sell it for 3.5 billion. That's a nice come up. And now I've got a team in the NBA finals. Hey, why not? The shift is happening. Why not get in front of the shift? Declining broadcast media revenue. We talked about financial gains, valuation, strategic partnership with a new arena and casino because that's where the money is going.
Let's invest in
All right.
people.
So the ask
Let's
is this. Look,
continue to see what's new, what's next, and we're gonna do that in a fun way. So we're saying, hey, got a year's time to plan for this trip. If you want to join, if you think that that's something that's important to you, what I would like you to do is hit me up at obi@spaceequitycorp.com. Again, obi@spaceequitycorp.com. And then I will send you a link to uh, our trip planned in April of 2025 to South Africa. It's a trip to have fun, but it's also a trip to explore what opportunities economically may exist in places that we didn't think about before. If you can do business here in the United States, you can do business other places. Having that flexibility may not be a bad thing. You can go away from this trip and do nothing on the business side and have a great time. It is a curated trip by good friend Courtney Nichols and her company Travel Bash. This is what they do, she does for a living. She knows what she's doing. I highly recommend her. I've gone on a trip that two trips that she curated before, and they were excellent trips. And have fun and maybe make some money while you're having fun down the road. Not from this trip, but down the road potentially. Hey, we believe when you come correct, that can't stop you. Space and equity, increasing assets and creating new space, even after a downturn. In group economics, we need business partners. So how do you become a business partner with us? Very easy. 20 years in the financial advisement space, realize that it's important to have our own licensing and be able to provide expanded services. So most of those 20 years are spent providing loan solutions, commercial loan solutions to my customers. I'm like, hey, I learned a lot throughout the process, so why not provide solutions on the insurance, on the AUM side of things for assets under management side of things for my customers. So we are licensed to that, and we can take on partners for that. You can also partner being a referral source. Hey, I don't have the extra time to be a business partner. That's not the vision I have for me, but I know a lot of people that need help in that space. If you're breathing, you're engaged in the economy in any sort of way, you can be a partner. You can be a referral source. And it can also be a client. So we have the consulting packages. These are for deeper projects that we talk about, but for the day-to-day financial advisement, and we use a partner in that, a marketing partner called World Financial Group. We could talk more about that, but you can also be a customer. Being with somebody, a trusted advisor, is important to a lot of people. And oftentimes we share or we trade that trust based on who we worked with to get that information. At the end of the day, guys, group economics is happening. So you got to get with a group that you synthesize, that you vibe with. And man, that's the scale that happens when a collective gets together. It's phenomenal. Just as Isaac Hayes III shared in the beginning of this clip, we believe, hey, if you come correct, they can't stop you. Space and equity, increasing assets and creating new space for the establishment of more free movement throughout the world. Have a good one. Just want to show you some partners in this space. You want to join us? Scan this, book an appointment, and we'll talk from there. Scan this, book an appointment, and we'll talk from there.